Head Technical at ICICI Direct. Dharmesh, good afternoon and thank you so much for joining in with us as always. But what's the view on the markets? Monday, yes, we saw that decline coming in given the global cues that we had seen. But by the end of the week, we're managing to hold on to some bit of a green. What is the word on the markets? How are you looking at the Nifty as well as the mid and small cap?
Yeah. So good afternoon. Yes, definitely. I think so. Market has been too volatile for the last 2 weeks on the back of global volatility. But we believe I think so. Market seems to get in some bit of a stabilization. Yes, there is something one day up, one day down right now happening in the market. But we believe I think so. 23,900 to 23,700 remains to be the very strong support, which we expect to hold in this current corrective phase. And we should see a gradual recovery. Yes, market seems to be facing some bit of a resistance around 24,350, 400. And if you look in the current trading session, there is some bit of a selling pressure around this level. But we believe next week, being a truncated week, we expect Nifty to see some bit of a gradual recovery and should surpass this resistance of 23,400. And we should be looking for a target of around 24,700 for the Nifty in the coming weeks. So yes, buy the dip should be the strategy. Even if you look at the India VIX, been a good indicator of a risk from the risk perspective. It looks like after making a high of 23 and current trading at 16. So if you look at the weekly chart of the India VIX, it seems to be more of a topping out formation for India VIX. So we believe, I think so, yes, things seems to be getting normalized by next week. And we should see a gradual recovery towards 24,700.
Hi, good afternoon. This is Cheryl also joining in actually, Dharmesh. What's your take coming in on the other sectors then in the market? Which one is do you think is looking good at this point in time? We've seen some sort of a correction also creeping in the markets, not only India, globally as well. So which sectors do you think now looks good and poised for the next, for taking the markets to the next leg of rally?
If you look at this current corrective phase, I think so oil and gas as a sector seems to be relatively outperforming even in this current corrective phase. So it looks like I think looking at the chart of the oil and gas index, we believe I think so there is long way to go for the index and we remain to be positive for the sector as a oil and gas. So oil and gas is one sector where we believe I think so we should get positive. Among those, again, I would say yes, there are some bit of a users in OMCs, but OMCs are the ones which will remain to be positive for the current levels. Apart from OMC, stocks like GAIL, Oil India, ONGC are the ones where we remain to be positive for. So oil and gas is one sector where we remain to be positive for. Apart from oil and gas, energies are coming to power. Now again, a power as an index, BSE, if you look at the BSE power index, a long decadal breakout and retesting the previous breakout level. Looks like power index has also a long way to go from the current levels. And we believe for power index stocks like GSW Energy or Tata Power or something like NTPC are the ones where we remain to be positive for. So oil and gas, power, IT, again, a sharp move after post results. And what we see is currently is nothing but a retracement of this last sharp move. So again, I would believe for IT as an index should see a gradual upmove from the current levels. And stocks like TCS and Infosys should be back in focus in the coming days. So IT, oil and gas, and power space is the one space where we remain to be positive from the current.
IT, oil and gas, and power are the names, sectors that you're looking at, and you gave us a certain some names there as well. Specifically, I want to talk on Apollo Tyres, right? We did see the numbers that came in, and then in terms of commentary, Apollo Tyres as such has not been able to perform versus its peers in terms of earnings. But what is the outlook for Apollo Tyres? We've seen a bit of a fall coming in the last few trading sessions. Would you look at it as an attractive bet on the technicals?
If you look at the auto as the index, I think so it looks like more of a consolidation, some bit of a corrective for across the auto space. So yes, I mean coming to tire stocks, even if you look at the results of most of these tire stocks, they are not in line with expectations and some bit of a muted commentary going forward. It looks like I think so most of these tire stocks should see a more of a corrective phase coming particular to Apollo Tire making a lower top, lower bottom formation on the weekly chart. Looks like I think so the stock major support of 505 seems to be broken down with strong volumes. Look like for target of around 275 to 480 for Apollo Tire. So not comfortable for Apollo Tire at the current. Maybe I think so it will take some bit of a time before the next leg of this.
So Dharmesh, giving the light that you are looking at the oil and gas, that particular sector is looking positive. Which are the stocks that one can bet on? Will it also be from the oil and gas space, or your top picks would be something else altogether?
No, definitely it should be from my top picks from the sectors only. So coming to oil and gas, again, I will remain to be positive for GAIL. I think so. Gas Authority of India. After strong sets of numbers, yes, the stock seems to be moving of last 8 weeks of consolidation breakout, retesting the previous breakout level of around 21. We believe, and so GAIL again looks more positive from the current levels, taking multiple support at 50-day EMA. Looks for a target of around 278 for GAIL, in a stop loss of 270. Apart from GAIL, again on the power space, we remain to be positive for JSW Energy. Again, a strong sets of numbers, and stock seems to be taking a multiple support at 10-week EMA on the weekly chart. And if you look at the longer term picture, it looks like upward rising sloping trading channel for the stock. So we believe for JSW Energy, again, clearly a relative outperformance even in this current corrective phase. Looks for a target of around 798, keeping a stop loss of 648. So JSW Energy and Gas Authority of India remains to be a top pick at the current.
Okay, Dharmesh, thank you so much as always for joining in with us on ET Now, talking to us about individual sectors as well as the top.